All right, so I'm officially recording. Happy Friday, happy Good Friday. It's April 2nd. Welcome to the weekly recap. This is Chris Pulver here. Let's talk about stocks, Forex, cryptos. Good morning to Ed, to Gary, to Jerry, to John, to Ed, to David, B, and Scott. What's happening? We just wrapped up a little non-farm payroll session. Pretty, unexciting as we expected with the markets being closed. I know that the U.S. news came out today. Forex is still open, but the stock markets are closed. Wall Street's closed. Juwan, what's going on? What's happening? Donna, good morning. Dana, good morning. All right, nice to see everybody. So let's go ahead and get into the charts. Let's talk about some stocks, Forex, cryptos. It's been a pretty, again, like steady week. Good analysis. Have some nice trades running. Excited for the next couple of weeks. Very excited for some live sessions next week. I want to drop a little hint on Equities On Demand, a course that I'm running with my good friend and partner now, Tyson Clayton. We have an awesome stocks and options course that we are taking to the masses next week, and we'll be live every single day running live trading sessions. It will not interfere with these YouTube sessions. I'll still be live on Monday mornings. I'll still be live on Friday mornings, but I'm going to change the time to 9 a.m. To make an official announcement here. So we'll be live on Mondays at 9 a.m., Fridays at 9 a.m., and then my trading room at the Equities On Demand, that will be live at 10 a.m. So if anybody's interested in joining me for Equities On Demand, that would be awesome. I can include a link in the recording here in the comment section. And that is, honestly, like, again, if it takes you, months and months and months of just kind of getting some free time with me in this YouTube channel, that is totally fine. But I'm really excited about this Equities On Demand. I actually have a couple of friends that I brought into it. I talked to my brother last night until like 2 in the morning, and I'm getting him in it too. I just think like there's a much more relatable way. I mean, I've been trading Forex for 12 years. Forex is a trader's market. Forex is a great market, but man, it takes a lot of time. It takes a lot of discipline. It takes a lot of just kind of technical understanding. You have to be way more of a spatially aware chartist, if you will, in Forex versus stocks and options. I mean, literally this week in Equities On Demand, we posted some alerts. We traded a couple of earnings plays, Micron and CarMax, and it didn't even matter what direction it was. We just knew there was going to be earnings. We knew there was going to be a catalyst, and we were able to take one leg of the option for profit. One leg we took a small loss, and we made money. It's like, that's pretty cool. CarMax, I know what it is. Micron, I don't know what it is, but I know that historically between an 8 and 10% move around earnings, it was a fantastic trade. So it's a lot of fun. It's a lot of fun, and knowing that you can have the market go up, down, or sideways and still make money is pretty effective. All right. Hey, Hammond, what's happening, man? Yeah, I'm really excited about it. So like I said, I'll put the notes when I process today's video. I'll put the Equities On Demand notes. We got a couple links if you want to check it out. Even if you want to leave me a comment in the YouTube video today and you ask me, Chris, can you send me a video or a recording? What I can do is I can send you a webinar that I did this week with Tyson. We did a ton of webinars this week, and I just want to drive the point home what we're planning to do with this. I want to make this one of the best services I've ever launched. Going live every single day. I'm already live Monday and Friday with YouTube. I'm live on Tuesday, Wednesday, Thursday with my trading room. And so, I'm meeting that demand. And this stocks and options course, I want to be live every single day. And I know that's a lot. That's a big commitment. At some point, Tyson and I will be like, maybe we're going to take a Friday off. Maybe we'll take a Monday off. We'll post a recording. But it's like, we'll be live 5 days a week. And if you can't attend live, we'll record it. We'll post everything in our Telegram channel. So it's just going to be an active class. We'll have plenty of trades from the short term, medium term, long term. I'm still waiting on the funds to process I'm actually rolling over one of my 401ks to trade. So I'll be working with about 100 grand for Equities On Demand and 100 grand live, and looking to make that as big as I possibly can. Because I know it's going to beat whatever targeted funds I'm in. So I'm rolling over those 401ks, and I'm trying to, again, safely grind it out. And that's what trading is, right? So cool. All right, let's get into the charts. I've been talking long enough. My face, I'm staring at you in the camera. My face is staring at you. So let's jump into the charts here. We know there's risk in trading. Please and always use trade capital only. Everything I'm talking about is for educational purposes only. The deal. Whether I'm talking about stocks, forex, cryptos, financial assets, involves risk. So that. Please trade accordingly. If you're following me out there on YouTube, I want to say, thanks for everyone for liking videos like this, watching those videos on my Keep It Seriously Simple video series, watching the trading indicators. I'm going to keep posting those videos. My YouTube channel, youtube.com/Chris Pulver. The best way people are contacting me is just sending me a comment through the YouTube channel, or you can follow me on Instagram, which is @pulver.chris, and you can send me a direct message. So that's the best way to get a hold of me. But we are streaming these sessions, on Facebook, on YouTube, on Twitter. And so I'm hoping that everyone has a chance to check in and check those out. So I know we got a couple watchers on Facebook right now, a couple watchers on Twitter, and most on YouTube, which is great. Right, trading indicators video series. Keep it seriously simple. I'll keep posting content on those. The one I'm finishing up now for the Keep It Seriously Simple video series is I'm trying to get some testing done for one of my robots, and I'm showing you the software. It's MT4 Portfolio Backtester and MT4 Portfolio Backtester from my friend Daniel Sinig at tradingindicators.com, and he also has a portfolio architect. And so I'm going to show you how the software works. I have about 3 videos done that I'm just going to end up splicing together because I'm breaking it down, and it takes, sometimes these tests will run with ticked at it. It could take like 24 hours. I have to let my computer run, and it's just been a very busy last couple of weeks, and I haven't had the time to do it all seamlessly. It's been interrupted. I've had to reset my computer. I've had 50 browsers running, and it's just been really slow and laggy. So it's better off if I can try to run it this weekend when I have the tick data stored and not let my computer be overloaded with other stuff. Okay. All right. So you can check that out. Also, if anybody's interested, I'll put this also in the comments. I've got a little See It, Protect It, Collect It swag out there. I've got t-shirts and sweatshirts. I know that for some of you that were awesome enough to send me a video just kind of talking about feedback of trading with me, what it's like to be in my trading room, just trading in general. I super appreciate that, and you will be getting these very soon. It's just ask come to me first. I'll send it to you, so it's going to be a couple of weeks, but thank you so much for those videos. If you're interested, check it out. Whatever, like I said, and I said this in I think Monday's video or even a recording. Anything that comes in, if you buy a t-shirt or sweatshirt, wear it with pride. Send me a picture sporting the t-shirt or sweatshirt, and I'll put you in my CP Trading Wall of Fame, my Traders Wall of Fame. And anything else that comes in proceed wise is just going to be helping the channel. I would like to have a little bit more production quality instead of this 4K webcam, which is great and convenient. I'd also like to get one of the big monitors, the 55-inch touchscreen monitor, set it up. I had the whiteboard a while back. I lost the battle of this office being converted to a little bit something more a little aesthetically pleasing. So the 8-foot whiteboard, which I loved using and had a lot of fun with those early Keep It Seriously Simple video series. Love that whiteboard stuff. I've used that whiteboard for years. And anyway, I had to make the room look nicer, the office look nicer. So the next step would be possibly the big touchscreen monitor where we can play around with the charts, and I can do it on the big screen TV like fancy meteorologist or whatever. All right, that's it. So let's get into the charts, yeah? Okie dokie. So let me go into the SPY. So again, markets are closed today. Bullish close on the week. We actually gapped up essentially all week. Let's go into the last couple of days. This is the SPY. We'll take a look at the SPY, the DIA, and the Qs. The VIX is down to fresh lows below $20. We just keep drifting lower. VIXY and VXX, we'll take a look at those as well. Gary says, where can we get them? Yeah, I will post it in the description. So after today's video, I'll process it. I'll post a link for the swag, and I'll keep a link in there also for Equities On Demand so you can check those out. So this week, let's take a look at the smaller time frame. Let's look at a 15-minute chart. Let's go back a couple of days here. So we have basically gapped higher almost all week. So let's go into, this is Thursday, right? So this is Thursday's trading day. There's no data from today. Because the market is closed, at least for stocks. Forex, you're going to have pivots and the market's still open. But in stocks, you're going to have Thursday's pivot here, and there's no data from today because it is closed. We closed right here at a fresh high on the SPY. Again, gap lower yesterday, and this is the type of trade I'd look for. If we gapped higher, I would have been looking for a quick fill of the gap and then a bullish move. Okay, I would have been looking for a quick fill of the gap entirely and look for a bullish move. Just because overall the markets are bullish, the sentiment is bullish. I'm still short-term bullish overall in the stocks, in the indices, everything I can get my hands on to buy low and let my profits run. So this did not come back. We had a gap open, it paused. It did end up going up nearly 1% for the day. but it didn't pull back for me to get in something like a day trade opportunity on the SPY. This one here, we gapped higher. So we opened here. We did not pull back and fill the gap again. That was another day that it's just it gapped and it was bullish and ended up sliding lower to close the day and then gapped higher on Thursday. So again, the way that I look at trading the SPY, you'll see me talk about this actually during our sessions in Equities on Demand. I am looking for these opportunities to day trade. I would like to day trade the SPY, like to day trade the Qs, like to day trade the diamonds. But I have a really simple approach. If we have a gap, I'm looking for that gap to at least try to fill. And so we can see that we opened right at this resistance and it became support for the day, ran up, and then the afternoon closed it back down. The gap higher here, it didn't pull back at all. We never filled that gap. We never filled the structure. There's still a pretty obvious gap right there from Wednesday to Thursday. Let's go into, that's Thursday, Wednesday, Tuesday, Monday. Let's see, Friday last week to Monday. We closed here. Monday was kind of a, noisy day. Tuesday, we gapped lower. This would have been a good opportunity to buy right here. You can see that we closed here, opened here. And this would have been an opportunity to buy and fill that gap by the end of the day. So of the whole day using the SPY, if you're just looking at day trading, this was a Tuesday opportunity. And the rule is, if I have a gap, I'm looking for price to fill it. So I'll give you the basics here. If I see that if we close on a Monday right here, okay, and we gap lower, if we gap lower on a Tuesday, so let's say this is Monday's close, and then we gap lower on a Tuesday, I'm looking for green or bullishness to take it back up and fill the gap. And if it opens lower and then goes a little bit lower, I wait for those Heikin-Ashi candles. I wait for some bullish candles. I look for some evidence with a very aggressive trend line. And I want to see if by, the mid-morning, like 10 to 11, or in the afternoon from 2 to 4, if we end up closing that gap to make some profit on the day, right? If it's the other way, let's say that this is our Monday close, okay? And then Tuesday is opening higher. If Tuesday opens here, this is what I'd like to see. If it opens bullish, that typically means that futures is up. That means that sentiment is up. That means that for the most part, the market would probably continue to go higher. But in order for me to get in on this trade, if it opens higher and goes higher, I'm not trading it. If it opens higher and it goes higher, I'm actually looking for a chance to sell that to try to fill the gap for the day. But my preference is, if this is the only opportunity I have to take, that's fine. But my preference is, if we gap higher, I'm looking for price to gap higher, quickly come back in and try to make an attempt to fill this gap, and then look for buy trades to continue with the futures market being bullish, to continue with the overall stock market sentiment being bullish, right? So just a couple of ways to trade some of these gaps. And this is not just on the SPY or the diamonds or the Qs. This is on any stock. If you're looking for day trading opportunities, it's nice to trade some of those gaps and have something that's oversold or overbought and looking to trade some of those extremes back into some of those gap levels. Okay, so that's the SPY. The diamond is going to be pretty similar. Thursday, Wednesday, Tuesday, not really a lot of activity to trade. This was Monday. We started off on Friday's close to Monday. Actually, the Dow had very little to offer. And if you take a look at the higher time frame, okay, it's interesting, right? Like the S&P is now the outperforming index. So the SPY is higher, the S&P is higher, the Dow Jones, there's the DIA, there's the Dow Jones. We're still on the cusp of going higher. Okay, but the SPY's actually taken the reins and become like the new high for the major indices. The Nasdaq, on the other hand, okay, we gapped actually really aggressively this week. So next week is going to be a really interesting week on the Nasdaq. It's going to be interesting for tech stocks, and the reason why is we are right back up into a resistance level. Let me go ahead and use a straight line here. We're into a resistance level now. You see that we have a gap right here. We have a gap right here. If we hit resistance starting the trading next week, we're probably going to come back down and find some of those gaps, all right, and find some of this support and resistance structure. And perhaps, the NASDAQ stocks will kind of, lead the way if there's a decline and it brings the SPY down with it. It might bring the Dow Jones down with it as well. I don't know. Okay, if it doesn't decline, let's say that next week we have this resistance level and Monday's candle closes higher as well. Well, if Monday's candle closes higher and we continue this move, I would have my sights set on revisiting these highs. And it doesn't mean that the NASDAQ is going up to new highs. It just means that the high is there as a target, right? As resistance. And we could end up hitting that high and coming back down, coming back down, coming back. We could have a range that is about to play out on some of these indices. So there might be a lot of volatility here. There might be some sideways movement. We have to be prepared for that. But I'm watching the NASDAQ very closely next week. If we go into a smaller time frame, let's check out those gaps from this week. Here's a 15-minute chart. Okay. So again, let's see if we had any opportunities to trade, and we really didn't. This was Thursday, Wednesday, Tuesday, Monday. So Friday's closed last week to Monday's open, no opportunity. Tuesday, just like we had on the SPY, Tuesday did present an opportunity. So Tuesday we had Monday's close right here. We had Tuesday's open. It opened, it went lower for the morning, and then we started to turn bullish and head back into the gap and the daily pivot. And by the time we close the day, take a look at this. If we had a chance to buy this nice and low, we end up finishing the day near the gap. So it's not a big move, but that's good price action to trade it right back into the gap and the pivot. And then Wednesday, we gapped higher. Now, again, think about my lesson here. If I gap higher, what do I want to see in order for me to buy it? In order for me to buy this, if we gap higher, I'd like to see the price at least try to pull back and fill this gap and then look for a buying opportunity. It didn't do it. As soon as it gapped higher, it just went higher for the day. It tried to slide and then it gapped higher again and it proceeded to go higher. So we have, you can see, pretty obvious gaps. This is an obvious gap right there. This is an obvious gap right there, which makes me think that if we hit enough resistance early next week, we will probably come back in and fill this gap, which means we could have a bit of a down week or a bit of a decline in the major indices next week. If NASDAQ brings it down, we'll see some tech under some pressure. Okay, does that make sense? All right, so just talking about, again, ETFs. We're going to talk about these every single day in Equities On Demand. In addition to what we're scanning, we're looking for short-term opportunities through the day. We're going to set up some earnings plays. I'm actually curious what we have lined up for next week with earnings plays. I do have one going on right now. I did close up. Let me show you. Let's see, realize positions, transactions. Let me see here if I can get. There we go. So here is. I've had some trades running. Let me bring this over. Oops. I clicked on it. That link is not what I wanted. Hang on. I'm going to bring up my here's one of my accounts. So these are just some recent transactions from yesterday to the last. I mean, this is really this week's trading. So, overall, made some decent profits, mostly on options, closed out some legs. I had one on Carmex. Carmex. I said that yesterday too. Carmax. I took a little. What was it? It was an iron condor on the SPY, and that paid out, decently well. I'm in on Micron right now. I'm also looking at some naked puts on United States Steel. I did close out on Cody. If you were in maybe 2 or 3 weeks ago, this was a stock we found. It was in consumer defensive. It's a not healthcare. It's cosmetics, and I was up. I don't know. I was up like $200 on it, and I just wanted to take some profit. So yeah, $244. I want to take some profit on that. So anyway, I've had some decent stocks in the last couple of weeks, and there's plenty more that came from. We're going to be super active. So thanks, Ed. Anyway, so we're just having some fun, and there's plenty of stuff to trade out there. All right, in the currency world, let's talk about let's go cryptos really quickly, and then I'll go into some currencies. So Bitcoin is at 59157. It is open 24 hours a day. It had a chance to spike up above $60,000 today, which it did. It is declining slightly off of those highs. So if you were with me on Monday, I talked about setting chart alarms, and I'm going to set one right here at this low. So just around $50,500. Recent lows. Okay, recent lows I will set an alert on. And also my recent high. So chart alarm here, and just see what happens. Hopefully we're going up and the cryptos continue to run. If we come back down, I'm prepared for this to be, maybe it ends up breaking the structure. We have this trend line we have been watching closely. That wasn't a very good line. This trend line here I've been watching pretty closely. So if we end up taking out this low or taking out this low, I think that we might be changing the course a little bit for cryptos to fall across the board. But they're getting a lot of love. They're not as, crazy, hysterically, euphorically driven like they were earlier in 2020 or late in 2020 or earlier this year. But the reality is there's not really an anti, crypto catalyst. I know that, the Fed is talking about Bitcoin is not really a store of value, not really something you're going to hang on to long term. And right now the Fed is downplaying cryptos, and I think it's an interesting dynamic. It's those that believe that this is the new decentralized future, and those that are like, no, it's always going to be paper money. It's always going to be banks, and I don't know. It's just, but sooner or later that adoption is going to take place, and whether or not it's actually Bitcoin that does it, if it's the U.S. creates a Fed coin or digital coin, or China does it, or these major trade companies, block companies do this. It's gonna change. It's gonna change the world as we know it, and I think that's really interesting. And hopefully, we stand to gain a lot of this from just the speculation standpoint. Okay. Daniel, interesting. Daniel says that Doji beat all the rest of the gains yesterday. Okay, let's take a look at old Doji coin. Doji, so yesterday it did, but you can see that it's taken some back. It was up like 20% yesterday. I also had a new high on EOS. This one, I mean, no joke. This one, so I know this is today is down 2.32%, but that's a pretty big run for the last 48 hours. It went from $4.30 to a high of $6. If we did $1.70 divided by $4.30, this is nearly a 40% run. Nearly a 40% run in 2 days. So that's pretty cool. I'm in this one, EOS USD. I'm in EOS at around $3.40. So it's up, it's positive. Also, Link is doing pretty well. BAT is doing really well. So the basic attention token at $1.19. Chart alarm set at the high. Ethereum, we are looking to creep up to these highs in Ethereum. Let's see if we can break those highs. Chart alarm set below, chart alarm set above. Let's see if we can break those highs. Litecoin. Litecoin is, again, chart alarm set at the high and the low. Give me 1 second here. I have to answer a question. My man Mark's asking me a question. No, today at noon. Okay. We're still good? All right, so Litecoin chart alarm set. Is anybody else looking at some cryptos out there? I know this. I mean, anybody in my trading room, you've actually thrown quite a few at me that I'm personally not in. I am in 8 coins myself. Interested in the speculation, but probably good. I think that right now I'm just gonna. If I'm gonna add to it, I have some cash set aside to add more to it. I did take some profits around 60K on Bitcoin. I did take some profits on Ethereum, but I want to get back into both of those if we have some decent pullback levels. Some of those profits I added into Ripple. Ripple when it pulled back. Ripple's at 57 cents right now. But I'm interested in Ripple. I actually was talking to Tyson yesterday about how to get out of Ripple if you want to get out of it, and I believe you have to use like Bitfinex. So I'm using Coinbase. So I'm using Coinbase, and I think I would have to use Bitfinex to exit. I'm not planning on exiting. I know that my bigger outlook is I want Ripple to try to get back to these 2018 highs. I think that what we need to see, and this is something you can watch and kind of set a chart alarm for. I wouldn't be surprised, and Richard was in my trading room this week, and he actually made a great point. If the SEC stops or allows kind of a relisting, okay? So basically, the SEC was like, "Hey, what are you guys doing? Here's some shady transactions." And the SEC started to put a probe in on Ripple. The good thing is it's recovered from we had a big spike from 20 cents all the way up to 70 cents, came all the way back down in the SEC probe. It's fought back, and Ripple is kind of standing its ground like, hey, there's nothing that we're doing that other coins aren't doing. But if it is able to be relisted, because right now if you're in Coinbase, you can't buy Ripple. If you're in different parts of the world, you can't buy Ripple. So I think if it gets relisted, I know the SEC is just in the U.S. That's the only jurisdiction they have. But across the world, if the UK allows it to be relisted and it's readily available for these brokers, if we get it relisted, I feel like this is where a break, retest, go. And that should be a pretty exciting move, right? If we break out of this level here, if we break this 75-cent high, we could easily run to that yearly pivot around $1.40. We could easily, just blow through all these levels and have this thing run all the way up to these highs from 2018. And that is going to make a lot of traders a lot of money, and that's going to be a pretty exciting time if and when we do that. Okay? So that's what I'm watching for. Just food for thought. Okay, so that'll be some Ripple action. That pretty much gets me through most of the cryptos that I'm looking at. Currency-wise, let's look at the dollar index. Dollar index at 11886. Our yearly pivot at 12090. There's still some legs to the dollar. Okay, so if we have any pullbacks, even today, the dollar index with non-farm payroll, it's one of the only currency pairs that is moving. Strength-wise, this morning, it is a mess. We looked at this morning during my non-farm payroll session. We have virtually no volatility for the morning in the Forex market, but our currency pairs are just, it looks like a Jackson Pollock painting, just all dotted together and all smashed up in different colors. So not really a lot of movement there, but dollar index itself is holding. I would actually look to see if you can see this nice little pivot cluster. If you want to take a look at my Keep It Seriously Simple video series, most of you may have checked it out, but I've got a pivot point video. This could be a great way to look for a chance to buy support and see this thing head higher. This pivot cluster happens to be right at this past high, and it's a nice support level. It might come right back into this pocket. It's a nice support level. So we'll see if the trajectory can continue on the dollar and continue to make waves up to the 618, continue to make waves up towards the yearly pivot and this previous high. So I'm still bullish on the dollar for right now, and I'm looking for that to continue to go higher. DXY, different weights, but you can see the dollar index is stretching up towards that pivot. All right, you can see that this one, this high, that yearly pivot. I've been talking about this for literally the start of the years to now. Like for the last 3 months, we have talked about dollar strength. Okay, so there's still room to this trade. Now, this trade, the dollar index, the DXY, this one is more heavily weighted on the euro. This one is more heavily weighted with the euro, and the inverse of that would be the Swiss. So the euro dollar has been steadily dropping, and the dollar Swiss has been steadily rallying. Now, we made some nice profits together on the euro dollar. We made some fantastic profits together on the dollar Swiss. And I'm wondering, with the dollar index still having room to the upside, if dollar CAD will start to catch up. Aussie dollar has worked its way down to some profit levels. New Zealand dollar as well. I mean, we've had some decent payout on dollar pairs. Okay, but until this hits this yearly pivot, or we have a little bounce to hit that yearly pivot, I'm still pretty bullish. And the reality is we might end up setting up a larger pattern. So you see this dollar index, we might end up coming back up to this high, okay, and we end up establishing a large reversal pattern. And this dollar index could come all the way back up to these highs again. And this might be, even though nobody thinks it's going to be, this could be actually the year of the dollar recovery. Because last year, the dollar was like the worst currency pair. We had dollar weakness, dollar weakness, dollar weakness, dollar weakness, all the way into, August of last year, all the way into the end of the year. And we finally turned the corner here in January of 2021. So I have been bullish on the US dollar. And what I'm interested to see is, will this get up to challenge these highs and create a larger reversal pattern to see this dollar continue? There are pockets galore, range levels all the way up here. And even though we might see a stronger dollar, we will probably still see sustainable stocks going higher. Okay, it could be one of those years where the correlation is the dollar gets stronger, the stock market stays bullish because there's no major catalyst to break it. So if we don't have, tax, like just aggressive and radical tax changes, if we don't have crazy and insane inflation, I think right now the market's going to stay the course. It's going to stay the course. So just my thoughts. I want to check out the 10-year Treasury notes. It's at 1.68. I would love for this to drop. I've been saying this for the last couple of weeks. I would love for this to settle back into 1.5, 1.4, 1.25. If it does that, I'm going to cough up some money and start paying for a locked interest rate on a new house. I've got a new house eyed in hopefully September, And I'm watching this to start closing on interest rates and locking things in ahead of time because the whole point is to try to lock it in. Let's take a look at those. Yep. So who asked that? Ed says, what about the 10-year? Let's take a look. You can check this website out, mortgagenewsdaily.com. I don't have the 10-year up. I have the 10-year yield at 1.73, or I'm sorry, 1.68. The 30-year fixed mortgage is at 3.39, which is down 0.03%. The 15 years at 2.83, which is down 0.02%. We saw that yesterday. We have the FHA at 2.8, the jumbo 30 at 3.33. So, I mean, I'm watching this very closely. I would love to get this 30-year as close to 3% as possible. You know, based on credit and cash available, hopefully I can get this thing at 3% or lower. That'd be incredible. But, you know, again, this is not in my control. I know that we might still find a way to drift higher. Like this, you know, this may not come down first. Maybe it goes up higher, hits 2%, and then it settles back in. And so just keep this in mind. If this trickles higher, we talked about this on Monday and last week. If this goes higher, it's this 2% level. This is probably going to start scaring investors again. We might see some sell-offs in the indices. We might see some stocks in the red, right? But it should settle back in, settle back down. And again, that's just solely based on technicals. We have this thing very overextended. All right. A lot of divergence. It is overbought and divergence. Hopefully, this technically plays out where it falls and I can lock in some interest rates. Stocks can keep going higher and we can get ready to kind of position ourselves accordingly. Okay. All right. Hey, Johnny. Johnny says a lot of familiar flex names here. Yep. That's right. Okay, anything else? I'm trying to think anything else for today. I didn't want to go super long. We've been at it for, I was live this morning at 8 o'clock. I just want to get a basic recap out there. Talk stocks, talk indices, talk volatility. Let's take a quick look at VIXI. Okay, we're at $9.06. I'm just going to sit tight in this for right now. I'm really interested in playing some naked calls on the VIXI, but I just don't trust it. I mean, honestly, this just might slide into like, if it gets low enough, it gets cheap enough, it's going to be repriced. That's going to be the difficult part is, we might be in here at, $8, $7, $5, and this thing might have like a 10-to-1 reverse split. And so you look at the VIXI and all of a sudden it's repriced at $90. Okay, so there could be some weird stuff going on with some of these volatility ETFs. So I'm watching this closely. My break even on the VIXI is around, I believe it's like $15. And the VXX, my break even on that one is around $12.50. I got on that one a little bit lower. So this one I'm actually sitting like I'm okay on it. It did break the lows from last year, but we're $11.05. My break even's around $12.50. So I'm just going to sit tight. If we have anything that scares the market enough to break this trend line, there's still this beautiful yearly pivot, and that is a nice opportunity to make some nice cash. And once I do that, this is actually the only reason that I'm still holding my Robinhood account open. So, if you're with me next week, if you join Tyson and I for Equities On Demand, what you will see is multiple broker platforms. I know that Tyson uses TD Ameritrade and he uses E-Trade. I have a TD Ameritrade account. I also have a Schwab account, so Charles Schwab, which they have their Schwab dashboard. They also have their Street Smart Edge, which is a decent platform. There is, what else do I have? TD Ameritrade and Schwab. I have a Webull account. I still have a Robinhood account, but Robinhood really is open for just a couple of trades. I'm mainly in volatility. I took a ton of money out of Robinhood and spread it out with all that crap happening from GameStop, just because, number one, I'm trading a lot more options, and Robinhood options are pretty expensive. I even went into the options chain on Webull. It's kind of expensive. Now, granted, it was maybe the timing of the day that I was doing a particular video on it, but options prices matters. If you're trading options, option prices absolutely matter. So Schwab is decent. TD Ameritrade is awesome. Also, Tastyworks, a great platform if you're an options trader. Okay? So again, food for thought. Just throwing it out there. There are lots of other brokers out there. I'm not saying these have to be the ones. I'm certainly not soliciting on behalf of any broker, but basically a stockbroker. So I had a lot of questions this week in webinars. Can I trade this on MetaTrader 4? Probably not, but there's a bunch of different brokers out there. So, again, stockbrokers are a dime a dozen. What you need to make sure you check out is, fees and commissions. And this is inside a video I did for Equities On Demand. Fees and commissions. Are they charging a round turn for, you place a trade, you get charged for it. You close a trade, you get charged for it. Or are the trading fees now free, and maybe it's the options that you're paying for? But fees and commissions are really inexpensive now for retail traders, which is great because, literally 3 years ago, 4 years ago, that was not the case. E-Trade was 495 flat. You had Scott Trade 495 flat. I know that Schwab was always like 495 to 995. TD Ameritrade 695. It's like you always were paying for those. Now they're nothing. You know. Fidelity. Thanks, Catherine. Fidelity's another broker out there. There you go. Fidelity's a good broker. Okay, so there's lots to choose from, and like I said, I'm not soliciting on behalf of any broker, but you need to do some homework. What type of trader you're going to be? Do you want to take trades with Tyson and I and be a day trader? Well, certain brokers give you better permissions. If you have $25,000, you can trade as much as you want anytime you want. If you have less than $25,000, maybe you need that three day trade permission for the week. And you can also trade on margin. So you can have a margin account versus a cash account. You can have some leverage to work with. So understand, are you trading on margin? Do you have a little cash to work with? Are you trading, a cash account or retirement account? What permissions do you have for options? Because some traders, if you just have a basic platform and you haven't expressed any knowledge or expertise in options, you might not have options available. So it's actually pretty easy. Just full disclosure, if you go into these broker platforms and you say, I've traded options for 5 years, then they'll probably give you like a level 2 or level 3 permission, which is okay. I mean, I'm not saying it's dishonest, because the reality is, I will be trading options, Tyson will be trading options, and we'll be walking a lot of traders through those trades. So that's my point, is like we will be, I mean, the friends that I've gotten involved, I actually talked to my brother last night. He's going to jump in as well. He's never traded options in his life, but I feel like it's a perfect chance for him to learn. It's a perfect chance for me to teach, and do it together, and a lot more fun. Okay. See, Derek says, which did you say brokers are to use for indices? I'm not recommending any broker, Derek. I'm saying that these are all brokers you'll see us use. Okay. TD Ameritrade, E-Trade, Fidelity, Schwab, Webull, Robinhood, Tastyworks. I have accounts in multiple broker platforms, and I did that after all this crap with Robinhood. I was already in TD Ameritrade and Charles Schwab for retirement stuff, but once Robinhood broke, I'm like, all right, I need to make sure that I am not going to get frozen out of my platform. The only next trade, or the next broker I would consider working with, would be Interactive Brokers. They can trade, in literally one platform, you can trade stocks, options, forex, futures, commodities, all in one platform. That's Interactive Brokers. So there's a lot of stuff. But like I said, the very least, find a broker that works for you. Low fees, low commissions, easy transfers of money, and it's obviously safe and regulated. That's the most important thing. Okay, so just a little PSA for the day. Yep, there you go. Ed says I have several brokers, but Interactive Brokers is my go-to. That's good. TradeStation. TradeStation is solid as well. TradeStation is who is TradeStation? That's E-Trade, right? E-Trade's TradeStation. So Thinkorswim is TD Ameritrade. Schwab has Street Smart Edge. I'm not sure what Fidelity's platform is, or maybe it's just Fidelity, but Interactive Brokers. Ed, actually, I've never used Interactive Brokers. A friend of mine just ended up moving a ton of money into Interactive Brokers because he wanted to have it be a one-stop shop. He wants to trade Forex and stocks and options. And he just said the platform is, it's definitely like older looking, it's older feeling. It has a little bit of a learning curve, but the fact that you can execute, on any asset class and trade however you want, that's a huge perk. Just Fidelity, okay. All right. So anyway, like I said, I'm not soliciting for brokers, but do some research. Fees low, commissions low, cost of doing business. Make sure it's safe. Make sure it's secure. Make sure it's liquid. And that's it. Yep. Ed says you can trade everything on Thinkorswim. Yes. You should be able to. All you might have to do is apply for permissions to trade futures or to trade Forex. I think they would just open that up. I know I did that yesterday for TD Ameritrade. I'm in the process of rolling over one of my 401k accounts, and it's like, it's going to be like 50 grand. I was going to put in 50 grand, and that is, I went ahead and just applied for everything. So I could trade all that, but I still have broker platforms for Forex, and I'm not going anywhere with that. So, it's, again, just know where your money is, right? Yeah, Ed says big learning curve, but I can also trade foreign exchange. Yep, perfect. Okay. Charts are not on Interactive Brokers. Okay, that's fine. It's probably I've like I said, I've never used it. It's probably just a dashboard. But and again, if you can place the trades and know what you're doing, that's fine. There you go. Fernando says, if in doubt, contact Forest Park. For Forex related, yes, absolutely. Okay, I think we've had enough PSA for the day, right? Um, any other questions? Anything you want to talk about today? It is Friday. It's Good Friday. I know that if you're in my Equities on Demand as a VIP, we'll be live at noon, and I'll see most of you there. If you're in here just joining me, thanks a lot for tuning in. Let me see where everyone else is at. We got a big audience on YouTube, a couple on Twitch. Hey, what's up, Twitchers? That's awesome. We got some Twitch, some Twitter, and some Facebook running, so nice to see everybody today. Again, if you have any questions, let me know. Leave a comment in the YouTube channel for links today. I will put a link in for Equities on Demand. There's a direct link. If you want a recording, if you want to watch a recording from this week, all I'm talking about are webinars that I did with Tyson. Just to drive the point home, this is what we're doing with Equities on Demand. These are the expectations that we have. If you want to join, again, ask me. If you leave a comment and say, hey, I'd like to see a recorded webinar, let me know, and I'll get your email, and I'll send you a recorded webinar. You can check it out, and there will be a direct link for Equities on Demand as well. I'll also put in my little Teespring link if you want some CP trading swag. Okay, Donna says, Disney. Sure, let's take a look at Disney. DIS. So Disney's at 188. I did buy Disney at $100, and I wanted to buy a lot more of it. I really thought that with parks being closed and literally no theme park revenue from Disney, I really thought that we'd have this rally back up into the COVID crash level, and we would start working our way back down. And I was really excited to load myself back up on the double bottom. I was looking at $100 and $90, and I wanted to load back up on Disney. You can see that didn't happen. And it was really weird. You know what's interesting is this was all because of Disney Plus. Okay, because theme parks were barely opening. And I know that they're like, well, the vaccine's coming, they're going to open. But right now it's like, there's what, 30% capacity, maybe 25% capacity, 50% if we're lucky. The revenue reality is fractional. But Disney Plus has been, shattering expectations, and that's great. But I still think as a growth opportunity, this still should pull back. And so if I can get Disney here around that 150 level, again, I keep talking about these yearly pivots. I would love to pick up Disney at this yearly pivot. And if it came down lower, I'd love to pick it up back at that COVID low. But I'm still going to wait. I did get some Disney in at $100. It's obviously up a nice chunk. But I want to buy more. I'd like to add more to Disney. Okay. Equities on Demand today, that is at 12 noon, Aaron, and that's for VIP. So we're going to have about 25 to 30 students in that. We'll be on Zoom. We'll see some faces. We'll talk to everybody. So if that is you, then we'll see you at noon. If it's not you, then we'll see you next week on Monday because we'll start our official trading room at 10 a.m. on Monday. Okay. Anything else? Check the email I just sent you. Yep, I'll take a look at it. Is it about high octane? If it's about high octane, I'm going to do a video on high octane and send it through Telegram. I have a plan for high octane for the rest of the year. Again, I want to allow traders to understand that high octane is stock heavy and stock intensive. Equities on Demand is a blend. We're going to be trading stocks. We're going to be trading a lot of options. Okay. Vision on the oil market. I expect oil to drop into the low 50s. I think that, it's up around $60, $61. Lots of resistance at 63 and 66. I expect oil to slide down to $51 or $52. I know that right now, I'm trying to think everything that happened. I was just reading about this on Morning Brew the other day. Maybe it was was it the Saudi Aramco thing? Saudi Aramco, even though they lost like 44% of their revenue last year, they still kept their $75 billion dividend. And the fact that price has been sustainable. We're talking about the national gas averages going up in the U.S. to like $2.88 where it is right now. We might end up creeping up towards $3 a gallon. I'm telling you, when gas is up above $3 a gallon, drivers are pissed. People in the U.S. hate it. It's expensive. So it's going to be a problem. There's going to be supply and demand levels on oil, and I think that's going to slide into those $50 levels. Okay. Okie dokie. Okay, what I'll do, Hammond, that's a good point. So Hammond says, please send me the recording. What I'll do is inside the description. Okay, so it's not going to be this video because this just posts immediately after we're done. I've got the recording going. What I'll do is I'll take that recording. I'll actually put in like the description in the notes, and I'll put in a direct link to a webinar. Okay, so I'll put in Equities on Demand, a webinar link, Equities On Demand, a buy it now link if you're interested, and I'll put those links into the show notes. Okay. Edward says IG as a forex broker, IG is fine. If you're in the US, IG, I mean, UK, it's huge. Like, IG is one of the biggest market makers in the world. They bought Tastyworks. They have the same clearinghouse like Apex Capital. It's a huge broker. Are they great? They're comparable. They're fair. It's a big broker. That's a good thing. I think the money is safe. I think they're not going anywhere. They've been a major presence in Forex for a long time. Platform wise, I mean, it's going to be just like anything else. They're going to have a web based platform, a MetaTrader 4 platform. Okay. Yep. I'll take a look. Yeah, I'll take a look at your email. I will. I saw it this week, and like I said, I know I have a week in review video planned and some live classes. I'm going to schedule a live class for High Octane in the next couple of weeks. I think I scheduled it tentatively for April 12th. But I want to get, all the high octane traders in. Let's talk high octane. Let's get a live class going. I've got a little watch list for everybody. So, with the videos to complement it, I'm still going to service high octane for the rest of the year. But my big push is blending my stock trading with options, getting way more involved in options. And that's where Equities On Demand comes into play. Okay. Are you going to do a preset for Euro Pound? Well, I already did that. We did that this week in the Flex Room. There is a preset already available for Euro Pound. Yep, it was shared in the room drive. Okay, AvaTrade for Forex. AvaTrade again. MetaTrader 4, basic platform. AvaTrade's fine. Okay, Aaron, you'll have to check with your rep on that, man. I don't know. I don't know when you signed up. If you signed up on Monday, maybe you're VIP. If you signed up on Tuesday, Wednesday, Thursday, maybe you're not. I know that within like 5 minutes we sold those 25 VIP spots. So I don't know. You'll have to ask whoever your coach is or your account rep. Okay. All right, oil, we're good. Pound yen, Aussie yen, let's take a quick look at those. I know we're going longer today. That's fine, whatever. We're having fun. Aussie yen, 84.12. Let's go back into the charts here. We're on the daily chart. So let's take a look. All right, now, remember, what do we talk about in the stock market? What do we talk about on the NASDAQ? Okay, do you notice that from these recent highs, this high, we have divergence? Okay, even if we come back up into test these highs again, what I love about this is we've broken this trend line pretty nicely, right? We have a high to low. Hopefully next week is going to be a lower high to lower low, right? And if that's the case, then Aussie yen looks great. We'll take out this recent low. We'll come back into this recent resistance, and anything around 8,200 or lower, I'm looking to take some profit and get myself out of this trade. Okay. So, I mean, that's what I'm looking for. I'm not asking for a lot. It's just like high, low, lower, high, lower, low. And even if it goes lower, I'm probably not going to participate too much more. I think, I'm already in on some of these trades up here. I'm in over here. I've taken a lot of partial profits. I'm still building a base position, keeping the trade size nice and small. But let's see if we can react on the backside of this trend line, work our way back down, and challenge these recent lows. This could be a head and shoulders. Left shoulder, head to neckline, right shoulder, and we could make a run down to the neckline. We could break the neckline, and we could actually see a lot more downside. So I will assess the Aussie yen for that reason. I will see, is there really a true shift in risk on, risk off trading? And we'll take a look at that. Okay, pound yen. Pound yen is similar. We have broken the recent highs. Oops, I don't need to do that. We've broken the recent highs. We have, again, stretched into this high in price, this high in price. We can see divergence on momentum. We can see bearish divergence on the relative strength and overbought conditions. So is it a matter of time? I certainly hope so. This little run to the upside, can we show some indecision? Can we start working our way back down? If we can, then pound yen should cooperate. I think if you're in the pound yen and we come back down in any way to challenge this low, protect some profit. If it pulls back, you can always get back in for a follow-through pattern. So, we talked about this week in the trading room. I think that the yen pairs, technically speaking, are very ripe for some strength. I think the JPY is ripe for some strength. I think it's ready for some strength, and I just want to see if it cooperates. That's all. Okay. All right. Dollar CAD says, well, oh, yes. Yeah, we did that today in the trading room, Walt. Did you see the post in Telegram? I posted in Telegram, dollar CAD. Where is it? Flex. So, yep, I posted the preset in the room drive. So you can log into the trading room, check that room drive, and it should be one of the top presets for you to download. Yep, we did it today. Okay. All right. What is the mortgage website, Aggie? That is Mortgage News Daily. MortgageNewsDaily.com. I look at this, every couple of days, whenever it's on my mind, checking the 10-year Treasury note. I look to see where we're at. The 10-year has a lot to do with mortgage rates. So if you're in the housing market, if you're closing on houses, if you're looking at houses, if you're looking to refinance, this is a really helpful website. Okay. All right. Cool beans. Anything else? Anything else? I think we're good, right? Good. Okay. All right, that's good. Hey, let's wrap it up. It's been about 50 minutes. Happy Friday. Happy Good Friday. If you want to join, again, Equities On Demand. I'd love to see everybody in that room. It's going to be a lot of fun. We're going to take a ton of trades. I am very much looking forward to it, and I just think that the relatability of stocks is higher than forex. I mean, I've traded forex for 12 years, and talking to friends and family about forex, it's like they never really understood it. They never really get it. Now I love it, and I'm still going to trade forex for as long as I possibly can. Stocks are definitely more relatable. I feel like I can get, I think that the level of we understand what the stock market stands for. We understand that we can, if we like a company, we can buy a company, we can hold the company, and the amount of wealth that can be generated just on buying, holding, and dividends is insane. The long-term wealth that's generated in stocks is incredible. Now you pair that with the privileges and permissions of trading options and the workability of options, then we're talking about some really, really amazing trades. And what I like about options is you never have to own a stock. You can completely trade options on underpriced, overpriced options. You can collect premiums. You can improve your cost basis. The market can go up, down, or sideways, and you can still make money. Very cool stuff. And I think that's something that, everybody should have the edge to learn. Everybody should have the ability to learn that, because I think it really can change how you trade. And hopefully what we can provide is a bread and butter strategy that you love and that you're going to trade forever. That'd be the coolest thing, is that you have a strategy that you love, you're going to stick with it, we'll teach you how to do it, and it's formulaic, it's systematic, and you can trade it forever. That'd be the best part. Okay. All right, traders, that's going to do it for today. Thanks for being with me. Happy Friday. Like I said, in the notes, I'll put some links in there for Equities On Demand. I'll include a link for a recording as well if you want to check out a webinar. Awesome. And again, leave comments, leave a thumbs up. I appreciate it. Thank you so much for watching. And we'll be back. Again, we'll be back every Monday and Friday for my YouTube channel. We'll be live at 9 a.m. That's the only change. So we'll be live at 9 a.m. on Monday. All right. And the reason why is because Monday after my YouTube session, 10 o'clock, we're hitting the ground running with Equities On Demand. All right. So 9 o'clock on Monday, 9 o'clock on Friday. Looking forward to seeing all of you. Okay. All right. Take care. See you next week. Have a great weekend. Bye.